You might use the register. So let's just check out the register. So I'm in the transactions, the chart of accounts. So let's imagine that we the owner are putting in a deposit to the bank. So to our checking account in the business. So in the checking account, we might go into the register here, which might make you give a feeling of the old check registers on a checkbook. And I can select the drop down and say I want a deposit type of form and just put in like the 12th, let's say. And then it might come from us, the owner, and I could just put owner deposit or something like that. And then we're going to make it like $500. So we're going to put the money in. If that was the case, we want to put it to some kind of equity account. So I'm going to make a new account just to show you. And the type of account, it would have to be an equity type of account, not income. If we put it into income, we're going to end up increasing our income statement. And if we're in the United States, paying taxes on it. So some kind of equity account, I'll put owner's equity just for now. I'll just say owner's contribution. So we're going to increase it there and say save and close. So it's going to increase this equity account. And if it was a corporation, by the way, it would be the issuance of stock would be the way that that the owners put money into the business. When you buy stock, that would mean you buy it from the company, not on the secondary market, which is where we normally trade stocks. So, but we won't get into that now. So let's save it and close it. And so now, if I go to my balance sheet for that one, we have to run it up top. And let's go into my checking account and see if that one came through. There's the 500 deposit form. If I go into the deposit form, notice it doesn't take me to the register, but it takes me to a deposit type form. I didn't check something off up top. I just recorded the account at this part at the bottom of the deposit form. Closing that back out, going back to the balance sheet. The other side did not go to revenue. That's the point here. It went to the equity section because we, the owner, put the money in. So that means from a balance sheet standpoint, what happened, assets went up, and then the other side was equity, but it didn't come through income, meaning equity is the amount of assets owed to us, the owner. So we put it directly into equity with an owner's contribution. We might talk more about that later in our practice problem. But one other way you might see a deposit is if it was a loan. So let's say we had a loan on like the 14th, came from the bank loan, and let's say this was $600, and it came from the bank. So I'm going to put it into loan payable. So it's going to go to loan payable, a liability, not income is the point. Let's save that. And then we're going to go to the balance sheet and then run it and check out the checking account. Otra vez again. Por favor, please. It didn't come through. Something happened. Let's go back and run it again. Refresh, dang it. Refresh. You should have a 600. There it is. There's the 600. If I go into that, there it is, our deposit form. It's at the bottom part of the deposit form. Boom. Close that back out. Going back the other side this time, didn't go to income, didn't go to equity, but rather went to liability for the loan payable. Loan payable right here. Boom. The $600 increase. Where, donde? It's not doing it. You're not doing it right. Let's refresh it again. What's wrong with you, QuickBooks? Getting slacking. Brain is going like Joe Biden's here, for crying out. Anyway. So, all right, there's the 600. Let's go back up. And so that's the general idea with the deposit. So with the checking account, remember that the deposits are going to be the form. If I go into the checking account here, all this detailed activity are happening in the checking account. Normally, the deposits are going to be the form that will increase the checking account. However, you could have two other forms that kind of act as the deposits depending on your accounting system, that being the payment form and the create sales receipts. If you're using a system that you're not putting that through undeposited funds, but directly hitting the checking account with these two forms. If that's the case, when you filter and sort by the deposit form, you have to make sure to pick up those forms, which could also be increases. The other thing that could be an increase to the checking account would be a bank transfer, like you transferred money in from the savings account, which was also a business account, to the checking account. In that case, you probably wouldn't use a deposit form, although you could, because the deposit form would be decreasing the other account. So we'll talk about the transfer forms later. But the checking account is the most common account to sort by transaction type. And so you want to know what transaction type forms are going to increase the checking account. That's usually just a deposit form, but could be those other forms, sales receipt, payment form in certain cases. And when you get a deposit form, if it's coming in from the from the bank feeds, and your system is just to record all deposits as revenue, we want to make sure that we pick up in some way the deposits that aren't revenue, those coming from us, the owner, or possibly from the bank. And usually it's kind of easy to do that because there'll be a nice round number oftentimes. But we want to make sure that we see that. Otherwise, most of the increases to the checking account, like we say, will be from the customer cycle in some way, shape, or form at the end of the cycle. Now, again, the one other way that we might have our customer cycle is we get paid first. And we'll talk more about that prepayment situation in the future because there's a couple different ways we can deal with that. You could enter the sales receipt first, which would record like a negative receivable kind of situation, which is a little wonky. And so I don't want to spend all our time kind of getting into that. So we'll touch in on that situation in a future presentation.